Okay, so welcome to the Enigma Strategy webinar. I'm Henry, and I'm going to be going through the major pairs for you, some really interesting developments, especially with the US indices, which I'm quite keen to show you guys some forecasts for that, and hopefully you can get on that as well for the long-term hold. Just to check, can everybody hear me? Can everybody hear me? Hopefully you can hear me, guys. So we will get cracking on this one. I'm going to start today with we're going to go with cable. We're going to go with GBP USD. So you would have seen in my market report that I put out on, I think it was Sunday. Yeah, Sunday. Very, very frustrating count, guys. Price has just doing whatever it wants to do. Every count is been difficult to get hold of, so I'm toying with a couple of things at the moment. Clearly, not much has changed over the last couple of weeks. We've just been seeing continued selling of the pound against the dollar, which is quite surprising, really, because the dollar is weak as well, really, really weak. But the pound is even weaker. So here we are, the pound still got this 1, 2, 3, 4, 5. We've hit, resistance here, support, sorry, around about the 119. We actually came as low as 120s. Now, really, I was in two minds here that, let's just get rid of this, that this cycle is over, that we should be seeing more upside. Now, technically, that's what the chart says, that, we should see more upside. And this would be our wave 5 of 5 here, so we are extremely oversold right now. On pounds, we are at a near historic lows, aren't we here? So I'm looking for a bounce. The bounce does need to be much bigger, but fundamentally, we had the GDP figures came out last week, which were down. I think it was 1.9%. So the economy itself is doing poor. It's not doing as well. Clearly, the things with Brexit, we've had the new PM come in. It's not looking great for the pound, and I think at best all we can expect for the pound is just to be ranging between in this kind of area here, between 119 and 123. I don't see any significant kind of bull run on the pounds, and I would advise you guys traders to stay away from this, because it's a very binary asset. It's going to go one way or the other way with extreme volatility, and as I say, getting the Elliott wave count on this has been quite difficult. Nonetheless, if we are looking to there is a potential to buy the bounce, perhaps with a three-way move. And I think in my market report I said we'd get a nice ABC up to around about 123.5, and then we're looking for another leg to the downside. Now, the depth of the downside, we need to go to a weekly for this. I can see the pound resuming its downward trend, if it doesn't already do that by the end of the week, down to 119. So that is where I see the pound going, at least down to 119, which would be a double bottom here, as you can see. Nice double bottom. Maybe something will happen, some fundamental news data will happen to allow us to see a bounce. On the longer term, I'm seeing this lower, much lower. Down to 113. here, and I'm saying that because overall this looks like a 1, 2, 3 structure. So an ABC, so we've got one A, B, and C down here, and so we typically have a 5-wave move down, a 3-wave move up, and another 5 waves move to the downside. Okay, so if you have any questions, please do ask. So looking at this, I'm even though I can see this going down to 113, I think if we break this level here, the 119, yes, I think we can start thinking about going to some shorts, putting some trades on. But because of the way it is at the moment, it is such a binary pair. I'm really hesitant to give you guys any real setups here. I mean, if you really wanted one, we could take the bounce off of the level off of 123 if price gets to there and we sell it. Remember, the trend is our friend until the bend, and at the minute our friend is a downtrend. So we'd be waiting for a bounce and then we sell down. And I'm really hesitant that this is actually going to do anything. So pounds. Binary instrument right now. I'd advise people to stay away from it, at least until we see any kind of move here. Let's see what happens when we get here. I mean, if we break this zone, I think we can start thinking about taking shorts as well, because would have been breaking another daily level. Yeah, if you've got any chats, if you've got any questions, guys, please do ask away. So that's pounds. We're next going to go to USDJPY. Now, I used to love trading this pair. It's one of my favorites to trade, but in recent weeks, it's become very difficult to really gather what's going on. So these are my levels, my weekly, daily, and monthly levels. You can see that we are right at this sort of confluence zone between a weekly and daily level. Quite interesting that I can see here as well, and hopefully you can see this too, is we have a triangle that's broken. Okay. Very, very clear to me. Triangle on the monthly. So breakout, potentially we'll get the retest and then a fall. So my bias on USDJPY is bearish. I do see it as bearish. I guess the question is how bearish are we going to be looking at this pair? Now you can see I like the idea of price coming down to 100, and I'll show you why I like that. But I can see price testing the 100s here. And actually, I think it was 2 weeks ago, I was calling for it to be testing the 105s when we were up at 108. And Bob's your uncle, here we are testing the lows like I expected. So I'm seeing some more downside here, and I really want to be getting in on this one. So let's go take a closer look. Okay, so here we are with the yen on the USDJPY on the daily. And just to recap and rehearse some previous webinars, we were trading in this range for a long, long time, broke out, retested, and we are just about to retest 104.694. Now, in terms of the Elliott wave count, is something that I really sort of I use. This whole structure looks very corrective to me, which means we're looking at ABCs and WXYs. So I'm looking at this one here, looking at this most recent price action. So this is what I'm looking at here, this high to this low to this lower high. And I've called it 1, 2, 3, 4, 5 at ABC. I think the best way I can see it is an ABC, and I wouldn't be surprised if this C leg takes us down to this zone when we get the Fibonacci extension out. So just remember that because I think this is an A leg and a B leg of a sort of a larger correction, our C leg will be around about the same length as our A leg. Oh, so that will actually come at 103. So in terms of trading this, here's what I'm going to be doing. I'm going to be waiting for a bounce at equal legs at 103. So we're going to be getting a bounce here at 103. I imagine to retest support, at which time we will resume our downtrend to 100. So there could be a very nice opportunity here to enter a short position around this trading zone here. It's going to get quite messy. I'm just going to get rid of some of this, this stuff because I know there's lots of lines. And that kind of does actually coincide, guys, with the retest on the triangle on the monthly. So looking for the retest up here and then a short position down to 100. Now, this is actually, because this would be multiple ABCs in a correction, this would now be a WXY down to here. And so we're going to have, as the Elliott wave theory posits, another round of ABCs here. Okay, so this is what the structure we're looking for is, basically a 1 2 3 1 2 3 1 2 3 1 2 3 for a WXY. So now we're looking for the test here, a bounce back up to 108, and then we are going to sell to 105. So this trade is not ready currently. We are going to need to wait on this one a little while on this one. I'm hesitant to buy it at the moment. I think if we were to get, let me explain, we could buy it potentially. We've got around about 50 pips to go here, but if we've got a nice bullish engulfing pattern, yes, of course, we could buy it back and then sell the bounce. But that's a more risky trend. I'd much prefer selling it when we're back up to value at 108.30. Now, as you know, it is August, so markets are quite slow, and that's something that is definitely we're definitely seeing that a lot at the moment. Markets are quiet. Going to move to gold. I keep putting this in gold. Moving to gold. Gold is okay. Here's gold. Let's start with 4 hour. Now, this looks like a wave 4, and this looks like we have finished a wave 5. Okay, so the last couple of weeks, gold has been rallying like a crazy thing, and we've come right back up to our upper band of resistance. Just go to daily. Yeah, so we can see at 1535. We need to see a retest now. It's very, very important because price has been basically on a parabolic rise for some time. So we're looking for a retest now. It's going to be at least to weekly support, which will be down at 1437. So let me just right. So when I explain a parabolic, guys, I'm talking. Look at this. This is a vertical rise in price, and anything like this actually reminds me of. I was trading Bitcoin. I think it was about 3 weeks ago, and we had I think anyone follows Bitcoin, we had a huge meteoric rise. It was more vertical than this. It got up to, I think it got up to about $13,000, and the sell-off was pretty scary actually. It was very quick. It happened within the matter of 2 days. I mean, I'm not expecting that with gold because it's a different asset, but we are now expecting a sell-off. As you can see here, we've got a 1A, B, C. This could also be a 1, 2, 3, 4, 5. And you know what, guys? I'm actually thinking about this is actually a wave 3. This is not an ABC. If it was an ABC, it would be called an extended C wave, so an extended flat. It would be the 1.618, which would take us up to about 1600. But I'm really now thinking that this is, just clear this mess here. I mean, I think we're going to be testing the 2000s personally. Eventually, it's always a case of when, isn't it? So give me a second, guys, while I just sort this out here. Okay. Okay, so here's the thing. Wave 3 of the Elliott wave theory always, most of the time, we're looking for 1.618 of a wave 3. This is our wave 3 here. So, you know, this looks very impulsive as well. So adds to the argument that this has more to go. Much more. We're looking at 1565. And I am erring on the side that it is going to push up here. If that is the case, guys, then this was what we're seeing right now is actually a very small pullback of actual buying opportunity, because this is many pips to go here. So so there, and 5 would be eventually up here. So I'm quite bullish about gold. It's about getting in at the right time, to buy. So let's look at this now on the 4-hour. Okay, here's gold on the 4-hour. So I'm looking to just change this up. Okay, so I'm calling this a wave 4. This looks like a wave 4. Wave 4 is typically very complex corrective moves like this. Actually ended up being a triangle. And then we come down to our final waves. This is wave 5 of 3. It should be 5 of 3. And if we go down, need to change this again. Again, you see we have another complex correction here, which tells me it's a wave 4, and which tells me that this final phase is a wave 5. Now, there are two differing arguments about, and I've been thinking about this all morning, about what, let's just get the fib level on this quickly, just to see. Okay, now you can see that the wave 5 of 3 hit on the button 0.618, which is a classic wave 5 finish point. Now, if this finishes, guys, we're looking to now find support back to 1510. So we're looking to find support back here, at least back here. I'll tell you when we can exit into this. So we're looking to find support back here, and possibly back down to our weekly support at 14. So I imagine that we will probably we will be correcting this whole phase now to the upside, finding support at 14.37 before a bigger bullish move up. So for the moment, I'm not going to be buying this pair. We're going to be waiting for price to consolidate back at the wave 4, and that's because wave 4 is typically a retracement of a wave 5, before buying this pair again, because gold is very, very bullish right now, guys. I can see this going. This is a nice buying opportunity right here that we can take it up to at least the 1700. So really, really nice move for us on gold. Also, we've got the fundamental data that the US markets are doing pretty badly, which makes gold a really nice safe haven. Okay, so that's the roundup for this. Well, I'm back again on. I'll be back again on Friday. Hopefully, we will have seen some movement in gold and the other assets. But for now, obviously August, not a fantastic month, but this gold could be setting up for a really, really nice trade for us all. So I hope to catch you on Friday. Thanks a lot, guys, and I'll see you later.